We'll test here.
And go ahead.
All right. Well, good morning, everybody.
Morning.
How are we? All right.
Excellent.
Nice to see you, Ed. Don, sleep okay last night?
No.
All right. I didn't hear you leave. Hey, before we start this morning, I'd like to, everyone might not know this, but wish Rhonda a happy 60th birthday. Everyone know it's Rhonda's birthday today? Huh? Yeah. Which is a good lead-in because she'll be taking her RMDs very soon to our IRA presentation. All right. So, do you like the picture Ed drew? Huh? All right. All right. So, for the next 45 minutes, what we're going to do is I'd like to talk a little bit about our IRA training program. Okay. It's an internal process that we've built at Time Financial over the last culmination of the last 10 years. I'm going to hand out books to you in a second. Okay. I'd like to keep this very interactive because this is all about learning. This isn't about me telling you what I know or me telling you what an RS knows. This is totally educational, totally interactive setup to help you, okay? You're going to have the entire process. We talked about this yesterday about our little box, our little, what do we call it, a time box, Rhonda? Okay, a lot of these documents that we hand you, they don't have to be static anymore. When we update them, you go into the box and pull these down, okay? So the document you have today, you don't necessarily have to keep like as a Bible. You just go into the internet box and download them anytime. Any changes I make to the PowerPoints that we're going to go through today are all going to be right up updated. So they're always fresh. You don't got to be fumbling through and saving, like Rhonda does. I got the final version 1, final version 2, final version 3, You got to be a little bit more organized than that. So that is going to be a very good thing. With the workbook, I really need your input. The best, we've gotten this far because people like Julie have said, you know what, at the banks, they want to see it this way. So then we've changed that, right? Okay, little things like that. And then what I'm hoping to do is that everyone has some next steps. And Julie, in this case, you got the with Huntington as an example, we have a formal process that we could co-brand to them, co-brand the calculator to them, co-brand scripts for them, and there's a lot of opportunities that we have that we could each do, okay? And, we talked about this, but, Dean Quasar, for instance, he's got opportunities in Manhattan that I know firsthand because I profiled some of the books. The IRA opportunities are off the charts there. So what I'd like you to do is think a little bit about your own opportunities and how you can apply them. And then Rhonda, Phil, and myself will work as your partners to help execute that locally. Fair enough? Okay? Good. I would like, please, for you to hand these around, and I hope we have enough. And if we don't, let's just, the younger people take one first. Just kidding, Tony. So I'll give you a second to hand on that. Let me tell you what's in this book that you're going to have in your hands. The cover of it says Regional Specialist Guide. It's actually an internal support guide. And we actually have a very comprehensive table of contents here. Okay? All right? So I'd like to walk through that table of contents and then what I'd like to do is I'd like to talk individually about what's in there and why it's in there. Okay? All right? And again, any interesting questions you can ask at any time. Try to save the boring ones for the end. First one is an overview. We're going to talk a little bit about why IRAs have had a huge impact on Time Financial and a lot of our customers, and why we think this opportunity is very valuable for us in the open market right now. I also will share personally that when I'm in the branches, which I've been in for a long time, there is no one else that brings the same skill set that we have that's able to do it. Most people are talking about product. Most people are talking about riders, and most people are talking about issues and stuff like that. We're talking about things like beneficiary designations, Roth alternatives, taxation issues, right? Impending legislation. We're talking about the soft stuff. A lot of people are talking about just the hard products, and that makes a big difference for us, okay? We're going to drill down on that. Section 2 contains everything that we think you need to know and where the resources are to make you a specialist in this market. We can give you the best kit in the world, but if you don't take the time to study what the difference between a primary and secondary beneficiary is on an IRA, you can't help yourself, okay? Even if you don't go through to the 12th power, we're going to give you the resources about where you can go, okay? Keep in mind as we go through this, whether you're marketing to a firm, a branch, an advisor, a bank, whatever, that we have a team of advanced marketing attorneys and CPAs and field people to help you out. So it does not all have to be in your head. Know where to go to get it. Number 3, the process. We're going to tell you about how we get our customers engaged. This is very, very important. We can have the best stuff, but if I just mail that book to Bob at Huntington Bank and say, hey, call me on this, it doesn't work that way. What we found is you've got to have a good center of influence, okay? You've got to have a very good center of influence. You have to have a way that you approach that center of influence with purpose, mission, and scope. You have to have success stories, you know? You can't go in and say, hey, I got a new idea, all right? We're going to have this success story. The other part of that is the development plan with the client. So we're going to walk through that, including, we probably won't do the role play today, okay? Just due to our time constraint. But I will share with you a little bit of the sample scripts that are in the book, and then we'll walk through some good examples and some bad examples how to do it. Fair enough, Phil?
Sounds great.
All right, thank you. Then what we're going to do is in our second portion, which is not in this first box, is going to be the actual PowerPoint presentation that we've used on the road. We've given this presentation in Manhattan, we've given it in Columbus, we've given it in LA, and a bunch of places around the country. Every time we've given it a little twist, right? We made it a little better, okay? We've learned what we've learned. Just to give you a quick, real-life example of that, I did this, and I had to, the honest answer is I kind of had to drag senior management in from Chase to do this meeting. We did the IRA presentation in Columbus, Ohio, in front of 25 advisors. As we walked through the presentation, some people were engaged, some people weren't engaged, and you'll see the PowerPoint. You'll either kind of get with it or not. From that meeting, we had 4 advisors engage, 8 clients apiece, okay? 32 clients identified, 25 client meetings set up so far for a net revenue opportunity of $1 million. One meeting, okay? And I'm not trying to motivate you or whatever, but just do the math, right? You know, one meeting in Huntington Bank in Columbus, another meeting in Huntington Bank in Indianapolis, and then Chase in Chicago. These are $1 million meetings, okay? So we can add that. This is a significant impact for us, okay? So that's the PowerPoint that we're going to do in the second piece, okay? Again, some success stories there. Section 5, we're going to drill down a little bit today. That's executing with the financial advisors, okay? It's easy, again, all these steps kind of have to work in a row. It's easy to do the PowerPoint. If we do a great PowerPoint presentation and we make a presentation, then all of a sudden Ed Jordan's back on his job the next day. Doesn't work. He's got to follow up. What email is Ed sending out? What action steps is he asking the advisor to do? What is he telling the advisor about his skill set that he can help and be valuable in his business, right? All those things we think are critical, we have those in the book for you, okay? The 3-meeting approach. It's one thing to be great at the PowerPoint, then be good with the advisor, be good with the firm. But if we are not good with the client, and we talked about this yesterday, if we provide no worth, what are we?
Worthless.
We're worthless, that's right, okay? So the local thing is that we have the specialist. It could be an internal specialist working directly with the client, often is. Could be a regional specialist operating in the field. We have to provide great value to the client. The product that we deliver to the client, not insurance product, the planning product, the intellectual capital product has got to be best in class. We do that via a calculator. We do that via a sales process. We do a 3-step meeting. We do a discovery meeting, okay? We're going to talk about what happens in the discovery meeting. We then do then do a presentation meeting, right? The discovery meeting is, I want to know about your vision, values, and goals. The presentation meeting is, Tony, you said you love your kids, want to pass this amount of money, right? I'm giving you options. I'm giving you trust options. I'm giving you product options. I'm giving you ideas at that meeting. You then decide, and then we have an implementation meeting. Good morning. So, anyway, so we're going to talk about that client process. Fair enough? Okay? And then last in reporting, we want to talk about follow-up. Okay? By follow-up, what do I mean by that? I mean that if I'm calling, remember we started with the COI, the Center of Influence? If I started with that COI, let's just say Julie is the president of Huntington Bank. If I ask Julie to set up a PowerPoint for me, excuse me, not PowerPoint, to set up a meeting with all her advisors, then I do the meeting, it's all great, getting good results. Well, if I don't report back to Julie and say, hey, thank you for the meeting, here are the results. Like I just said, I got 8 advisors, 4 things, right? If I don't report back to you, I'm not doing this job full circle, right? We might get Sean Carter to set up a meeting for us in Indianapolis. You and I might fly to Indianapolis. And we might, do a meeting, right? We need to follow up with Sean Carter. Sean, here are the results. And I've been giving you a template in here to do that, okay? So, does anyone think I missed anything? Bob? No?
No, I think you hit it.
All right, thank you. Don't call him the best colored man in the business for nothing. All right. So what I'd like to do, I'd like to spend a few minutes on this, okay? So, what I'd like to do is jump in a little bit first to talk. And Rhonda, may I ask you to keep the time for me?
Yes.
In case I get a little long-winded or get some boring questions like we had yesterday. I'm just kidding. All right. There were great questions yesterday. Number one is the overview, okay? So why are we talking about this market? We do a lot of things at Time Financial. We do comprehensive planning, right? We do very detailed comprehensive planning, right? Trust work, titling, all that. We make a lot of comprehensive things. We also do a lot of asset leveraging, right? We talked about B-Trust. We talked about fixed asset leveraging. Yesterday we spent a whole lot of time on annuity leverage, okay? So why do I think and why does Time Financial and then our team feel that the IRAs have the best value in the marketplace? The fact of the matter is and I know you can read what's in front of you here, the fact of the matter is the assets that they have in IRAs are the leading asset class at the firm, okay? It is absolutely huge. If you look at some of the firms and some of the assets that they have, I think we talked about the fact that there was $6 billion of annuities sold last year in Chase. The amount of IRA assets is in the trillions. It is a staggering amount, okay? In addition to that, we have found that there is virtually, well, that's not true. That's not fair. There is very little educational and intellectual capital out there, okay? The 70-year-old at any one of our customers who's got an RMD to face next year, I would bet you everything that I have does not understand how RMDs work. I bet you she does not understand the ownership of the IRA, what's proper ownership. She does not understand titling. She doesn't understand beneficiary designations. And I'm pretty confident, as you probably all are, that she can't do the Roth IRA analysis or explain what a stretch beneficiary is, okay? And I see it every day, and I know you all do too, but this is a huge opportunity for us, okay? So what we're trying to do is we are trying to go in and educate and be that specialist, right? Melina, I want you to be able to say to an advisor, anytime you have a Roth, anytime you have an IRA client that's approaching RMDs, please approach me with that because we got some great solutions, okay? We're going to talk about those solutions. I'm just right now focused on the opportunity, okay? The other thing reason we focus on this, and we're maniacal on this, is the current tax law. There is significant confusion around the tax law. Despite what you may see on MSNBC, people have concluded that the $5 million exemption that we have this year versus the in-law writing that it's going to go to $1 million is not going to be final. It'll probably be somewhere between there, okay? How are you, if you're 72 years old, trying to make ultimate decisions for your children supposed to plan in this environment? It is virtually impossible. So what happens? Most attorneys are not going to put their nickel down and predict the future, right? They're going to have a plan. They're going to have these wait-and-see plans. Well, the problem with wait-and-see plans is if you die before the wait-and-see period is over, right? Okay? IRAs that are not set up correctly are tax bombs, all right? I see these cases over and over and over. And I don't see them at work. I see them personally. I have aunts die. You have grandmothers die, right? And you see these IRA assets these IRA assets of $800,000, $900,000, by the time they go through the ringer and pay off the medical bills and pay the income taxes, they got the state income taxes, federal estate taxes, and in New York you get 11% inheritance tax. California, I think, is pretty high too. Okay, you're talking up to 80% of the IRA is going to be lost. Okay, in addition to the fact that those IRA assets are subject to creditors, the things that we can provide are very unique, and I'm very passionate about that solution. So, walling off the client, the fact that we're doing the right thing for the client, which I think is why we're doing this, is important. I'd like to have an honest conversation about the advisor as well, okay? So let me just walk you through an example of why this advisor might make sense. We often in Time Financial, and this won't be able to be read up there, but we often at Time Financial are focused on the client. We need to also be very sensitive about the advisor. Okay, why would the advisor work in this marketplace? Well, let me tell you what happens. And at the risk of sounding a little direct, if a client, let's just take a 70-year-old client, okay? And I'm going to ask a couple of questions here. If this client's got $400,000 in an IRA, Ed, what kind of trail compensation? Keep in mind, this advisor is paying for his own office, he's paying for his own assistant, he's paying for his own benefits, right? This advisor is a business person, okay? This advisor, you want to get that? Sorry, Ed, leave your phone off, will you?
Sorry.
That's fine. It's a nice Bob the Builder thing you got in there. So an advisor is a $400,000 IRA, okay? Trail compensation. Do you know what the advisor is getting on that? Ballpark? Okay. Anybody want to take a step? Phil, you know the you know?
I said 0.5.
Good guess. Probably right. Okay. Anyone tell me what 0.5 of 400,000 is? Anybody? I know you didn't get the math memo. Right? $2,000. Thank you. Okay. So this advisor has to full service that client for $2,000 a year. Okay. Full service. Okay. Now, most likely, we'll give you an example later. Client dies. It's all set up wrong. So let's say client's 70 years old. Say probably worth $250 to the kids, right, somewhere in there. Okay. So the client basically is given $250 to the kids. Okay. Pretty self-standard. I know everyone in the room has a lot of experience. Pretty standard stuff, right? You're going to lose some money. Okay. What we can do is we can help this client. Okay. By repositioning the IRA into a series of vehicles, trust and ownership with the right beneficiary designations to keep that asset creditor proof and tax proof, and to guarantee a certain rate of return for the children, okay? Which in many cases is what the client wants, okay? We're going to go through the numbers later, but I can easily turn this $400,000 asset easily into a guaranteed $600,000 after-tax bucket of money for the children, okay? I'll walk through the math in a second, but let me tell you why that's important. The advisor has to understand the simplicity of this. We are the complex solution. This is the simplicity, okay? This solution, okay, will often generate in excess of $25,000 in revenue to the advisor. The utopian thing for our industry is when an advisor does the right thing for the client and gets paid very handsomely to do it, okay? So, 25 versus 2, good, bad, right? Make sense? Okay? Now, why would an advisor do this? Natalie? Advisor at Chase. Let's talk about an advisor at Chase. I profile a lot of books. I know you do too. What do you think the average advisor, and let's just profile our client, what we're looking for. We're looking for 70-year-old people that have IRA assets over, say, $300,000, right? Okay? The average advisor at Chase probably has what, 15 of these? 20 of these, you think? You see them every day.
At least.
Okay? Let's use 20, okay? If they're doing none of these now, who's doing this business? Because this is a good idea I just gave you, right? Isn't it pretty good? Okay, who's doing it now?
The competition?
That's right, Bob. Competition, right? Who is our competition? Their competition, excuse me.
Everyone else out on the street.
Everyone else, not like Kmart and stuff, but like, Northwestern Mutual, right? HSBC, right?
Yeah.
A couple of those firms, right? All right. So our job is to tell the advisor the simple story, why it makes sense for him, and most importantly, for the love of God, why wouldn't he do it, right? Don't let the guy down the street do it. So that's our job. Make sense? A little too much drama, but it makes sense, right? Okay. So that's why I'm working on it. And why you would work on it is simple, right? We all get paid when they sell insurance, okay? So all good there? Okay?
Yep.
But 1B, I'm moving on to, okay? So, again, I'm kind of in the getting your buy-in stage, and I think I already have that, but I want to share just a couple stories about how you can expand your role in the mass market. I've been at Time since 2002. I hear this constantly from firms. You guys are awesome on big cases. You guys are great on big cases. So I'm in the firm, and all of a sudden I see one of our competitors making a presentation on PowerPoint in the room, and I'm like, well, I thought we were doing a good job here. Oh, you're doing a great job. Are you kidding me? Every client over $10 million, you're doing great. We give you every one. So I said, what's this about? Oh, he's just doing IRA leverage. You guys don't do that. You guys don't do that, right? You ever heard that, Tony? Yeah. So it's just been driving me nuts. I'm like, well, why wouldn't they do the IRA stuff with us? We got a calculator, we got a process. And the reason is because they don't know, okay? They don't know if we don't tell them, okay? So if you don't tell the advisors, and I'm not telling the firms, and Julie's not telling the banks, and Steve's not telling his barber, they don't know, okay? So we have to be the first one to tell them, okay? So there's a couple real life stories in here, and I tell you what, the real life stories really are the ones that hit home because every advisor has one. So I always like to ask advisors, what's your experience with IRAs? Have you had any bad experiences? And there's a couple I put in here. But basically, and we might have talked about this yesterday, about the beneficiary thing, but we saw a client the other day. The client died, and the advisor was all upset because when they went to pull the beneficiary from the IRA, the two minor children, we talking about this? Where the two minor children were actually the beneficiary of the IRA. Well, looking back through the notes with the advisor met with the client. The client says, oh, no, I'm getting a nasty divorce. I want my husband off. So the advisor, I don't know if they're just having a bad day, wasn't paying attention, said, no problem, we'll make your kids the beneficiary of your IRA, right? We're going to take that bad ex-husband off, right? No problem. The advisor switched it. Anybody know what happens when a 17-year-old and a 14-year-old become beneficiary of an IRA?
They're not of the age of majority, and
So
the state will appoint a guardian over the money, or the parent if the parent is alive.
Exactly. So guess who gets the money?
The parent.
The ex-husband. The ex-husband, right? So we had a client meeting. We give not us. The advisor gives the client bad advice, right? Okay. All of that could have been avoided, right? And if they'd have done our job and let us look at doing some things, we probably could have taken that IRA, which instead it was worth $500. Okay. After taxes. Long story short, it was kind of there's a lawsuit and stuff, but basically what happens is the kids are going to end up with like $350. Who knows what they're going to get after the ex-husband's out buying bass boats and going to Vegas and everything else. That's not on tape, I hope. But you get the idea, right? Okay. We could have put it in a trust with a spendthrift provision, with an education clause. If we were involved, we could have done some great things for that family. And instead, the kids are going to have to take their chances with that ex-husband. Okay. Kind of a story, but there's a million of them out there. If you ever Google IRAs, you can Google IRA horror stories. They're in there. If that doesn't motivate you to take action, nothing will. Because if you really want to help your clients, that's the key. So, make sense so far? All right, good. How are we doing on time? All right?
Great.
Good, thank you. Section 1C. If everyone could pull that up, please. All right. This is essentially our approach, okay? Which is our little color in mine and black and white in yours, okay? But when you pull it off the time box, it'll be. Okay, so what we're doing is, this is our process. We approach a center of influence. Could be Sean Carter at Huntington Bank, as we mentioned before. It could be a Chase Sim, Joe Agresti in Phoenix, right? Okay. It could be at one of the IMs that we're working with in Dallas, okay? Or in your case, you know, we've got a lot of good traction with the Sim, Joe Delaney in Long Beach, okay? And I know you might have a couple places in Troy, Michigan that we're doing it with. Whoever that center of influence is a person that can get people in the room. You know, and that's like me calling you and saying, hey, listen, I got a great idea. We're going to sell long-term care tomorrow, whatever, right? You'd come, right? You know, you'd come, right? Just not because, you know, I'm paying you, but you'd come, right? And in most of these cases, they are getting paid by this person, so it actually works better. So what happens is, if you follow my circle here, I ask let's use Sean Carter as an example, because he's a good one. I'm going to ask Sean, I'm going to say, Sean, we've got a great program that we run at Time Financial. It's a program about IRAs. We teach you about titling. We teach you about Roth alternatives. It's very educational. However, we'd like to help your clients out with a lot of this stuff. Would you be willing to set up a meeting for me and Julie Cassins in Indianapolis? We think your wealth management division can really profit from this. Not profit, but benefit. Better word, right? Okay. So we set up the meeting. We have a team at Time Financial that actually does really pretty invitations. I don't know if you've ever seen them, but they're gorgeous. Comes out. Would you like to attend this meeting? From Sean Carter, CC, Julie, and Scott. Very professional, right? That goes out there. Then what happens is we do the meeting that I'm doing next, okay? We do the meeting, we talk about the opportunity, we talk about our services, our values, and everything else, okay? Then what happens is we got our people on the street, and we got our people here that do this. Ed's going to be making phone calls, right? The advisor's going to be making phone calls. John Danville is going to be working, calling the attendees. Did you like what you heard? Can we help your clients? We don't call them and say, can we help you sell life insurance? We call them, did you like the titling presentation, right? Did you learn anything about Ross, right? All these things, right? Then what we do is we do the work, okay? We will generate revenue, right? I want to talk about that in a second. We will generate the revenue, and then it's Julie and mine's job to report back to the center of influence while you sell and the IRS sells. Pretty good, right? Make sense? Okay. So before, so that's our visual there. Before I move on, I'd like to make sure that everyone understands what we're asking for in this meeting. We are asking to engage. When we work with an advisor, we are asking them, first of all, we're asking them to try one case, okay? To try to get an idea if they like to use this, okay? But if you look at a 12-month cycle, and I think you need to get this math down if you're making an argument. I actually use this math on my parents. Of course, they're retired, so they listen. But I use this math on branch managers. I use this math on advisors, anyone I talk to, because this is math. If you do one client a month, Ed, let's role play this. You're the advisor, I'm me. Ed, if we do one client a month, how many clients would we do a year?
12.
Yeah, that's why you earn the big money. 12 clients, right? Ed, let me walk you through how this is going to look. If you're willing to commit to me, let me be an executive planner to your 12 IRA clients, okay? I promise you this. You will have 12 great experiences. Okay? And by great experience, I promise you the client will leave our process feeling very satisfied. They will understand the tax law. They will be very comfortable in the way you manage money. We will make sure the kids are comfortable with the strategy, okay? I can't guarantee that everyone is going to increase revenue, but I can guarantee you 12 good customer experiences. That's huge, by the way, okay? Let me tell you what my experience has been. I started in this business in 1988, okay? So I can tell you this factually. I'm not BSing you, okay? Out of those 12 great experiences, 2 out of those 12, and I know they're your good clients, 2 out of those after the experience will bring money to you. and I know you're probably saying, geez, a lot of my clients all have my money. I promise you, I've done this for years. They'll have an old account at Schwab they forgot about. They'll have money sitting in Fidelity, okay? Now, you're a seasoned veteran, and I'm going to take a break out of this role play. Natalie, or Melina, if you have clients that you know have money elsewhere, now I really have you. You know, see what I'm saying? Because now I've really got your attention, because your goal is to bring money to the firm. That's why you were hired. Ed's a seasoned veteran, and my experience is 2 out of these people will bring money over. In fact, true story, John Trainer brought over $1 million last week by doing one of these. Dennis Kahn brought over $600,000 to Huntington Bank because he asked a question. I can do an IRA plan for you, Mr. Client, but I need to know where all your IRA assets for. Otherwise, I just do a bad job. The money is all over the place. It's sitting in Met Annuities. It's sitting in Schwab, like I said. It's Northwestern Mutual. You will gather millions of dollars in assets from this experience. So let me back on here. I ADD'd out for you for a second, but just stick with me, okay? 2 of these clients will bring assets. I'm going to predict $1 million, okay? But my experience is it comes in buckets, it comes in waves, but 2 of these people will bring over at least $1 million. Not $1 million, $1 million, okay? 10 of these people will decide to take action. Take action means to move money. Move money from fixed income to whatever you're doing. Take action means, look at a new investment portfolio, buy an annuity, buy insurance. 10 of them will actually make a decision to do something, because we're going to give them ideas. 10 of them will implement a new product, okay? 2 of them won't, because where they are is good for them, which is fine, because this is objective, okay? Out of those 10, we will process 7 what I call planning transactions. A planning transaction would be a combination of a systematic withdrawal and a gift into a trust, and most likely insurance, okay? You're going to have some underwriting issues. You're going to have people that don't like their kids. It's just all part of our process, okay? Those will average, Ed, and keep in mind, I know, Ed, you and I are doing this for the client. I'm just sharing what's in it for you, because I think you're going to spend a lot of time on this. Those, Ed, will average $25,000 per transaction. In my 20 years of doing this, that's the average, okay? So, you obviously know the math. What's 7 times 25?
175.
That's right. So, my experience, if we do this right, Ed, I will guarantee you that I will bring over $2 million, and I could generate most likely $175,000 of revenue to your line, okay? Now, I don't know if that gets you in a new bracket. I don't know if that gets you a new title or a new office or an additional assistant, but my goal here is to help your clients. I'm just saying the ancillary benefit is for you. It's for you. Okay? Make sense, everybody? All right. Does that flow? Does that feel realistic to you, Steve?
I would just say that it also adds retention to the client.
It's a great point. Great point. Great point. So a lot of ancillary things also that you might want to become familiar that I'm not going to touch on too much. We talked about this is going to introduce you into the next generation. These 75-year-old clients, their kids are how old, right? They're in their 50s, okay? They're worth millions too. These people got money, the kids got money. Most of the kids are not clients. Most of the old people, okay? Great way to get new clients, right? You also meet their attorneys and their accountants, right? Because if we do a plan, we're going to copy them. You're going to get referrals that way too, okay? And you become a superstar in the bank. If a bank teller or bank center of influence finds out that you're great at doing IRAs, what do you think are going to happen as the next wealthy person that walks in the branch? They're going to get it to you, right? You get a reputation, okay? So it's a huge thing for us. So, okay, I did a little overkill on that, but makes sense? Good? Okay? All right? So, know the math. Critical. All right. Next, this is the intellectual part, okay? We are now on to 30 minutes in, we're now on to section 2, okay? And we're going to fly through some of this on the back end, okay? So, section 2 talks about being adept at the conversing in laws, rules, options, and alternatives, all right? I am going to consciously float by this because a lot of this is in your book. I can't motivate you to this. You just have to study it, you know? I've given you a couple resources on here. There's a couple different distribution rules and taxations. We have a calculator which we're going to talk about, which will do the rules. The key things you need to know are in order here. They are the distribution rules and taxation. They are the beneficiary rules, which are absolutely critical in the IRA market, okay? As in, if anyone other than a spouse is the IRA beneficiary, they do not inherit the IRA, but they have the right to receive distributions, right? Big deal. Spouses are big deals in IRAs, okay? We could talk about that block, just the beneficiaries, for an hour. I'm asking you to do it yourselves, okay? Titling is actually probably a little overblown. It's actually pretty simple. 99.9% of the time, the actual participant's going to own the IRA, okay? It's very unusual for something to occur. Sometimes I've seen somebody with a mental incapacitation issue. Sometimes there's older people with Alzheimer's that there's some unusual titling that gets involved and stuff like that, and some court-ordered stuff, but typically, you're going to see that, okay? Roth alternatives, I know you've all seen this, and if you get the USA Today, right, it's on the cover, right? Does anybody know, through work or personally, a 70-year-old who has made a conscious decision to write a six-figure check to a Roth alternative plan because it just makes more sense 20 years down the road? Does anyone know that person? Because I heard they were out there. You sure? Does anyone know where D.B. Cooper is? All right. Despite what you may hear, Roth are fine for some people. It's my experience is they are not happening every day. Okay. That does not mean that we can blow this off. We still have to tell them what their option is. Okay. A Roth alternative is a decent option for some people. Some people are going through unique situations where their tax bracket's going to be different now, and they think the tax bracket's going to be different later. Okay. It's just my experience that if I go to you, Melina, and I say, hey, listen, I need you to write me a check for $100,000 right now to the government because I think tax rates are going in this direction, and 20 years from now I'm going to save you $102,000. Would that be of interest to you? Right? Generally not, okay? Still know about it. Don't be blowing it off like I am now to you. Just kind of have the facts, okay? And then there's some other resources on here. Our carrier partners are a great resource for that as well. We got some training yesterday from John Hancock about some of the resources on there. Don't be afraid to go on there. Actually, the IRS is a great section on IRA rules and distribution, okay? So you ought to be studying up on it before they change it again. Okay? All right? So, 2C is just a little bit of a continuation of that. And this is what I call the layman's decision, okay? 2C basically says, there's several options a client traditionally will have. I'm going to leave the obscure stuff off for now, okay? Number one, Ed, this is our favorite, right? Do nothing, right? Right? That's the easiest thing to do, right? 99% of clients out there are doing nothing. They just keep putting money away or it grows, no problem, right? I got my RMD coming off. I'm just going to put it in another account, right? I don't need it. A lot of clients take the RMDs and spend them, okay? And by the way, each one of these solutions that I'm giving you right now, we can do the numerical analysis on, just to let you know. So if these situations you run into. Take the RMDs and spend them, pretty simple. We got a lot of people take the RMDs, they go on vacations with it, okay? You can take the RMDs and gift them, right? Anybody have a grandmother giving them a check, or anybody have aunts and, checks once in a while, all right? I'm poor. I just thought you guys would have people that had money, Bob, you?
No.
All right. Take RMDs, gift, and buy life insurance, right? That's obviously a very successful option is, okay? Next one is I got a bunch of these. I don't know if you've seen this a lot. We give the IRA to charity, and we buy life insurance for the kids. I got a guy right now who's got a $2 million IRA, right? His kid's a little aggravated with, doesn't want to deal with it, loves his church, right? Great strategy, right? Each one of the kids is getting 200 grand, guaranteed. Doesn't care if he dies tomorrow, doesn't care if he dies in 30 years. The church is getting the IRA. And it's great. Think about it. There's no income taxes, right? No estate taxes. The IRA goes right to the church, loves his church, doesn't really like his kids. but knows that he's got to take care of his kids, because if he doesn't, who's going to pay for the education for the grandkids, right? You've heard that story a million times. It's a great option, just to throw it out there, okay? Convert IRA to Roth, I just kind of poo-pooed that, but you still should look at it. And then exhaust all stretch options. Anybody help me out with what a stretch is? Not like stretching, but like stretch IRAs. Does anyone help me out? Okay. It's basically, Natalie, you want to take a shot at it?
I'm not certain.
Okay. I'm not either. That's why I was hoping someone else would. Can I have this?
Yes, you may.
Thank you. A stretch IRA is when, I'll relate it to my situation. So I've been married 22 years, and assuming she's still home when I get back tomorrow, she's the beneficiary on my IRA, okay? My children are the contingent beneficiaries on my IRA, okay? So if for some reason, the way the IRA is, the way the rules work, is if I passed, my wife would be allowed to take over my IRA and not pay income taxes on it, okay? Without a contingent beneficiary, if something happened to her, like if we both went down in the plane crane without the contingent, my kids would have to pay the tax, okay? But since they're a contingent, they would then have the right to stretch out all those taxes over their life expectancy, which would be a big deal if your kids are in your 20s, right? So instead of my kids paying tax, right, they have the option to take that and stretch it out forever, okay, which is a big deal. Yes, sir?
If you're already in RMD, isn't it based on your life expectancy at that point instead of theirs?
It's a great, great point. If you are RMD, you've already elected. Yeah, you've already elected. You don't have that luxury, right? So the RMD stretch discussion is important. And it's important for two reasons for me. Number one, stretches are great, okay? You need to have that discussion. The IRAs need to be set up correctly with the correct beneficiary designations, okay? And number two, why that's important, and it's a little trivia question, does anyone know, because everyone loves stretches, the percentage of IRAs that are actually cashed out 12 months after death?
70%.
Good guess. Anybody else? It's higher than that.
90.
The answer is 93. The answer is 93%. So someone answer me this question. This is more psychological, more sociological than anything. Why would, if we all know stretches are a wonderful way to stretch taxes out, why would 93% of them be settled after 12 months?
Because the beneficiaries want the money.
Very simply. Right on, Bob. Right? Bob wants a new bass boat, right? You know?
That's it.
You know? You got it. That's
They
right.
don't know the tax applications.
They don't care. They
It's
just
found money.
don't
I
care.
inherited an IRA once.
They just want
And
cash money.
I was told I had to cash it in within 5 years or
What? I
pay
don't.
taxes or something. I don't
So
know.
you had to.
I had to cash it in within 5 years or convert it to another IRA.
Yeah.
And still pay taxes.
Yeah. Well, you are. It would. I mean, each situation is different. You might have been a contingent beneficiary and part of an IRA, or you also might have had a trust that's been, trust rules. But the rules candidly have changed in 2008 and beyond.
This was about 10 years ago.
So that means 20. No, I mean, you're right. It doesn't seem like it, like.
Yeah.
Like I redid my wills, the other day. It was like 98, So, no, it goes fast, right?
Yeah.
So my point is, just if you know that the client's kids need the money, let's just plan accordingly, right? And it's actually even more powerful if you know the client kids need money, let's talk about insurance. Let's stretch the IRA so they don't have to pay taxes and buy a little insurance, right? How are we doing on time, Rhonda?
We need to probably wrap up this section.
Okay, good. Good, all right. So, we're moving towards the end. Actually, that's not true. We're moving towards section 3 out of 9. Just sounded the way I said it, better the way I said it. So let me just share with you a couple more of the tools that are in here, and then we continue our conversation a little later. What's in here next is a little bit about the detailed parts of the high-level process that I talked about. The color graph I showed you, each one of those scripts is in there. Don't want to go over it, it's relatively mundane, but the proper language, the proper English, and what's worked and what hasn't worked is in the book, okay? Some success stories are in the book too, because I think it's powerful that, You know, Bob, if you're talking to someone in San Bernardino, you say, listen, we've done this in Columbus, Ohio, New York City, Tampa, Florida, and I'd be happy to get you the managers to share that success story. That's a lot more powerful, isn't it, than saying, hey, I got an idea, right? So some success stories are in here as well. RMS is a key part of this. We've made phone calls when we have set these up. Regional marketing specialist has reached out with phone calls. It's a very professional way to do it. That's in here as well, okay? As I mentioned, the scripts. Then we also have a very granular process that's included in here that talks about the advisor. The page I gave you with the revenue example, I gave you that in about 2 minutes. The 20-minute discussion's in here because you don't want to rush that conversation in real life. You want to take that 2-minute thing and draw that out. What does that mean to me as an advisor? Okay, that's in here as well. The client process, which we have not spent any time other than my little quick commercial about the 3-step client meeting, that is in here as well. It's very critical that the advisors know what you were doing in front of their client. I would never put Mr. Ed Jordan in front of my client unless he was able to articulate exactly what he would do. I want to know his fact finder. I want to know his line of questioning. I want to know his credentials. I want to know his experience. You have to be able to articulate your value prop to these advisors. That's in here too, okay? And the follow-up and reporting, which sounds easy. We've used Julie and I as an example on this. That's probably more for us than you, but it's a key part. Okay? So that concludes my education around the book. Does anyone have any input to share, or are we getting, everyone feel pretty good about it? Okay? So with that, I'll go ahead and conclude this session, and thanks for attending today.
Yay.
All right.
All right, stop taping. Let's take